This video offers general insights for swing traders focusing on short-term market trends. Traders should be extra cautious to fully understand the presented information.
Howdy, swings. On August 1st, Thursday, the market experienced a steady decline from 10 a.m. onwards. Although the market has strong potential, it had been anticipated that it might move sideways or even face some bear traps due to the volatility. A rally is expected in the near future, but it might not happen tomorrow. Let's take a closer look at Fullhapce forecast for the market tomorrow. Swing trader's friend, Fullhapce Intelligence presents today's Wall Street market news for August 1st. Overall, there was widespread selling today. S&P 500, 5,447, minus 1.37% down. Dow Jones, 40,347, minus 1.21% down. Nasdaq, 17,194, minus 2.30% down. Russell 2000, 2,203, minus 3.07% down. Bitcoin, 63,387, minus 1.91% down. Phil Semicon, 4,860, minus 7.14% down. Gold future, 2,487, 2.48% up. Texas crude oil future, 77.00, minus 1.17% down. 10-year bond interest rate, 3.98, minus 3.24% down. Dollar index, 104.14, 0.28% up. Hang Seng Index, 17,305, minus 0.23% down. Nikkei 225 Index, 38,126, minus 2.49% down. VIX Futures, 28.76, 14.04% up. Semiconductor Bull 3X, 34.99, minus 21.18% down. Today's performance: REITs, certain materials, telecoms, healthcare, consumer staples, and utilities performed relatively well. Many stocks didn't do as well as expected. Semiconductors, travel and leisure, consumer goods, capital goods, energy, housing, banks, and autos face challenges. The reasons: stocks experienced significant selling pressure recently. Concerns about economic growth increased after two negative economic reports. Poor earnings results from companies like AME, ARM, ETSY, IR, LRCX, NGM, mRNA, QCOM, WDC, among others, led to notable declines. Monetary policy is adjusting to the current situation, but there are worries that central banks might not be acting quickly enough. The situation in the Middle East contributed to the overall negative mood, though it wasn't the main focus. Things to consider: the increase in U.S. weekly job claims and a drop in manufacturing data might suggest some changes in monetary policy, but they also point to ongoing challenges for economic growth. Central banks are starting to ease their policies, but they're doing so slowly. Economic indicators from Asia showed weaker performance in July compared to June. Various consumer companies, like Hershey, Wayfair, and Wendy's, are facing some troubling signs. Airlines have been struggling with tough operating conditions for a while, and now other travel sectors are also experiencing difficulties. Some tech companies reported strong earnings, but several chip makers, such as ARM, ARW, and WDC, gave less optimistic forecasts. Many companies are noting weak conditions in China. Maersk's positive update suggests that shipping costs could remain high for U.S. businesses. Tensions in the Middle East have increased this week, and markets are watching to see how Iran will respond to recent events. Market forecast for swings: there's a job report coming out tomorrow, and it might extend the market's current decline. Companies are reporting better profits than expected due to cutting costs, but many of their revenues are not meeting expectations. Many companies are facing somewhat softer conditions without obvious reasons, which raises concerns about the overall economic situation. The Fed might consider lowering interest rates even if the job numbers are strong, but if the jobs report shows significantly weaker results, it could raise concerns about the economy and potentially affect tomorrow's market performance. The market could potentially decline a bit more. However, this might also support some positive movement in the future. Market might go down further, but it will help build up energy for a stronger near-future rally. Secondary scenario for risk management. Although it's less likely, the market might either remain flat or partially recover some of today's losses. This may create some uncertainty about the market's position in the short term that could delay the future rally. Several factors could potentially help the market steer clear of additional declines. The job report could potentially help the market move upward. The Bank of England lowered rates today for the first time in over 4 years. Recent U.S. jobless claims and manufacturing data also hint at a softer approach to monetary policy. This earnings season has shown some positive trends with companies seeing good earnings growth and generous returns of capital. In the transport sector, CHRW and XPO showed good earnings growth. The market might face difficulties in the short term, either moving sideways or declining further. It could be prudent to wait for signs of a rebound after the market hits the bottom. It may be wise for viewers to consider both our primary forecast and alternative scenarios to manage risk. Thank you for watching Fullhapce Intelligence, the best investment partner for swing traders.